Hey everyone, this is Trader AG and welcome to another public update. After a massively successful week with me and the tag team, last week was absolutely stunning. We had 7 trade setups on Bitcoin and NQ and it was all longs. I've told you last week on the public update as well that I am only looking for longs and I stuck with that rule that I had because we were at range lows, right? I'm gonna run a clip of that video in just a minute, but for now, I want you to understand that over the last week, I have had an amazing week of 8R win, and it was one of my most successful weeks where I had five winning trades and 2 losing trades, and in total, it was just a massive week in general. You can look at the R wins of each trade as well. They were pretty pitch perfect when it comes to how well it was executed, and now you might tell me, well, AG, what do we do now? We are at the middle of the channel, as we can see. Like, do we take longs here? Do we take shorts here? Do we go to the range high here, range low here? Well, I'm going to run you through all of that, right, in a second. But for now, I want you to understand how my mindset actually made me profitable last week, because this is a key component of if you will be successful in the market or not. Right, looking for correct positions, looking for correct market conditions is so important on the chart. And last week I gave you the perfect example of that. So quickly, just give me 1 minute here, right? And this will be the most important minute of this video. So just listen to this one and you will understand why I'm telling you it's so important.
Dollars. Can we push down? Can we currently just do this move and then just grind down and go lower? Obviously, yes. But does that mean that this is a good area to short? Absolutely not. So that's the number one thing that you have to get in your head. Because currently, if you ask me, this is obviously a bearish outlook as well in the market, but it does not mean I'm looking for shorts, right? I'm looking for long positions, and that's been my stance since we had this Sunday break. Now, I took some long positions. I am in a long right now from 76,000, what was it, 76,700 or something like that, or 75,700, something like that. And it was a scalp long position. But I think if you are a beginner trader, or if you're in the market as a swing trader or someone who does not have a clear system in their heads, I'm going to give you what levels you should look out for in the market before taking new positions, because it's really, really simple for me, and I'm going to explain it to you as well. Now, first things first, we are between this weekly open level right here and also the daily open level sitting at 76,200, if I'm not wrong. Yeah. So we are between these two levels, and I think they are the most crucial levels of this week. I think above this weekly open, it would be a really big sign of strength on the chart, because going above the weekly open means that the price start trying to push down, right? Since that Monday high was tagged, we saw that the price has been grinding down and tried to make a new low, but it was unsuccessful in doing that new low. And we saw a lot of shorts come into the market in this zone as well, which means that people were actually trying to short the market. But if we're able to reclaim this weekly open, that will be a really good sign of strength into the market, because it also means that we're back inside this big range we had on the chart as well. Now, does that mean that if we just...
So, I mean, it's harder to make a better prediction than that, right? And you can see it as well. Like the price at that point was grinding at the lows right here, and we had this massive candle, came back, visited that weekly open once again, and then had this massive move again. Like, it's so crucial that you understand how my bias is actually making me profitable without actually predicting the market, right? I do this every single week on the market, where I don't predict the market, but I just tell you what I am looking for in when it comes to positions, right? At these levels, does it mean that it cannot just grind down? Obviously it doesn't. It can just continue down. But my mindset at that point is I will only look for longs, and if I'm not in a long, I will be sidelined. And that made me extremely profitable this week. So please understand why these videos are so important, understand the main concept in these videos, and today I'm going to do the same for you as well. It's going to be as important of a video as last week, so stick with this one. And yeah, let's start with it. Now, what do we see on the chart? As we just said, we are in the middle of this channel, right? So we are at the middle of the range, which means that the chances of you getting a high probability setup is low. And the reason for that is because this is the area that we usually have chops, as you can see here, here. Like the chances of the market just completely wiping out longs and shorts in this zone is pretty high, where you don't get any good positions, you don't get any high probability setups. And also, like, if you are going to take a long position or a short position, let's say here, right, like, where do you even put your stop loss? Like, if let's say you put your stop loss here, or I mean, you can't even put it here, because if you put it here, you're basically putting your stop loss at a support level, which you shouldn't. And so that your stop loss should be here, and then where do you aim for? Like what is a good trade here? Like, this is a 0.777 RR trade, which is not even good. And if you do the opposite, you'll have the same setup as well. So this is not a good area to look for longs or short positions in the market if you are a swing trader. And even a scalp trader, if you're not professional, if you're not experienced in actually making money in the market, please, right now at this point at $86,000, do not trade. Right, that's the best advice I can give you here. And what levels do you look out for next? Well, for me, it's really simple. I made the plan for the tag team on Sunday as well, that if I am going to be looking for positions in the market, the number one area that I will always look for is the value area high and the low of this range. So here you can see that the value area high of this range comes in around 88,400, and the value area low of this range comes in at 80,574. So what does that mean? Does that mean that if the price goes up and hits that level, I'm going to just take a short? Obviously not. And the reason I say that is because if you just look at the past data, you'll see how well it was respected. Here you can see on the 24th of March, the price hit that level, had a rejection, had a second hit, rejection, a third hit, rejection, and you might think that, if we just hit it again, I'm going to short the market, I'm going to make money. Well, it doesn't work like that, unfortunately. So what you should look for here? Well, how value areas work is once you have a clear value and a clear range in the market, what you should be looking for is short positions above the range high or on a certain failed auction above a range high, and long positions below the value area low. So if the price is able to go through this value area high and push above these levels, what you should look out for is, are we having a lot of long positions entering the market? Are we seeing a lot of open interest increase? Are we seeing the CV divergences on the chart? And if that is the case, if you're seeing clear signs of bullishness on the market, and retail is long in the market, we're at $90,000, everyone is getting, now you're looking for $98,000 next. If that is the case, what you should look out for is, okay, now the sentiment has changed, now the people are bullish here. Well, what happens when we're back inside the value? Well, now that's a sign of weakness on the chart, because you have seen the market become extremely bullish above that value and people getting excited and people longing the market, but now they're actually trapped in their positions. So that is the number one thing that you should look out for if you're looking for short positions in the market. In the opposite way, if the price decides to push down from here, right? So let's say it goes to $80,000 from here, and whatever it does, comes up, comes down here, and then grinds down into this value area low. What this level means is that the 70% of the volume now is above us. So if the price is able to successfully go down and push below these value area low levels, what it means is you should look for if the people are getting bearish here. Right now we're below $80,000. Are people shorting the market? Is the open interest increasing? Or are new shorts opening in the market? If that is the case, if new shorts are opening, if the market players are getting overly bearish and looking for $70,000 next, you should next look for the reclaim of this value area low. So here you're looking for new shorts are opening, the sentiment is changing, the crypto Twitter is going extremely bearish, and then if you see this value area low reclaimed, now that gives you a perfect scenario to actually long the market, because you have trap traders here, you have people getting still bearish here, shorting the market here, and then you can potentially have a setup that will get you to the value area high next as well. And the reason I say this, and the reason I say that these are the best setups in the market, is because we are in a range. Right, that is so important to understand. People always love to look out for 100K or 70K by next week, but the chances are, if I have to put my life on it every single week, I will just put my life on the fact that it will be a range. And the reason I say that is because it ranges 80% of the time. So the chances are I'm going to win. That's why it's really important to understand and actually identify these ranges like this, and then find solid areas where the market is actually showing you a change in sentiment from the retail, and then you can go against that sentiment. So at this point here at $86,000, I think you will see both long positions and short positions in the market, which means that you will not have the best scenario. You won't have the highest probability setups, and I think the highest probability setups comes in below and above that value. And if the price decides to move up or below that value, so again, it's really important to understand that price can just go and do this and then just go up. What you should look out for is the same thing that you should look out for at those value area highs and lows. So this is our range, as we talked about. And if the price decides to push above this range high, I will look for certain or potential failed auctions in the market. And if the price decides to go below these lows, I will look for failed auctions below these lows. So again, same concept, but the closest ones we have is that value. And again, we are in this range, so this is the one that we should analyze in the market. So please have those value areas charted on your market, on your trading view, and just when we are around the middle of the channel, don't trade. And I'm going to give you the macro perspective here as well before I end the video here, because it's really important to understand it as well, which is the fact that we are actually, I'm going to go on the daily perspective here because it shows you the market narrative a bit better. So I think a lot of people will call this the macro low here, right? You might have seen some posts on Twitter that people are calling that now we have this wedge and we are breaking this wedge, or we are having this trend line, we're breaking this trend line, and now this is bullish. Well, unfortunately, I would not say that for now. And right, people are getting extremely bullish at these levels and telling that, you can just look for all-time highs here next. But the problem with that one is we are seeing a clear change in market structure on the higher time frame here. So for the first time in a very long time, we have seen the market range for around 2 months. And after this range, price broke down, and now the price is ranging below a previous range, right? So that is usually a really big sign of weakness in the market, because that simply means that the price accepted lower value, and it has been accepting for the last 1.5 months, right? This is not just a failed auction setup. This is not just a power of 3. This is not a manipulation pattern here. It's just price accepting lower prices, which usually means that this is the fair price in the market. And if the price decides to move above the fair price, above the fair zone, what you should look out for is you should look out for shorts. And if the price decides to move down below the fair value, what you should look out for is you should look out for longs. And that's exactly what I did at these levels here. When the price moved below the fair value, I was looking for longs. And when the price moves above the fair value, I will look for shorts. So I hope you understand that. And again, this is a good way to look at the market if you don't want to look at it in the range perspective. I think, again, the market structure is still really clear as well. Like, just because we are breaking a trend line does not mean that we are not just simply putting lower lows and lower highs consistently, right? Like, even this high here is still a lower high. That's so important to understand. Like, you go on the 4-hour chart and just look at the market. This is not a bullish market, right? Like, we had bullish markets, and if you have been in the market since like November, even, like, you know what a bullish market is, right? And this is not a bullish market. This looks like the ETH chart. We are having consistently putting lower highs and consistently putting lower lows on the market, and this is a lower low. Don't forget, and this is a lower high. So please, like, don't get overly bullish here, don't get overly bearish here. When we're at the range highs or when we're at above the value area high here, look for shorts, right? That's my advice to you. It doesn't mean that you have to get in a short, but just be more inclined to look for short positions when we are at resistance. So that is my update for you guys. Hopefully, next week I'm gonna go and return back to this video and tell you how successful that analysis was. Could be wrong as well, but I have a good understanding of the market. So hopefully we'll be back with a good video. So thank you so much, and I will see you on the next video. Bye bye.